We are live. G Spice, everyone. Welcome.
Spice.
Mr. Pepe, I, Etty, thank you for joining in. And to our community, thank you once more for joining in for another episode of Spicy Takes. So if you know there's anybody that needs to be here, you already know the culture, please do share the link with them. Let them know that we've started. And of course, the space is being recorded. So if you miss any bit of this, know that it is recorded. You can always go back to the replay. And today's space is quite exciting. I'm definitely looking forward to it because this is one of our partners that we have as a special guest today. So I'm just going to take a few seconds so that I'm sure that we are live, and also to inform the community that we are live. Okay, and yes, we are live. So yes, welcome once more. If you know you're just joining, just drop in a spicy emoji, your favorite emoji. Let's know that you are live here with us and you are actually listening in and you can hear us really, really clear. So we're just going to dive right into it since it's been recorded so we can keep it as short as possible. So yes, of course, I am Amara, and always, this is Spicy Takes, and we are at episode 20. I can't believe it, 20 episodes strong,
Oh yeah.
and today, and today we're diving into a very spicy topic. From fragmentation to flow, we know that liquidity is spreading across chains, lending is siloed, and user experience often feel like broken. But what if lending across chains could actually feel native? So to help us unpack this, we have an exciting guest who is Etty, founder of Venice. So hi Etty, please can you give us a bit of background of who you are, what you're doing with Venice?
Yeah, thanks for having me. Yeah, so as you mentioned, Venus is a lending platform looking to solve the fragmentation problem. So what we identified and what we see in DeFi today and in across ecosystem is that you have L1s and L2s with native tokens that generally have the most TVL. But across all this ecosystem, there are two assets that are basically wrapped Bitcoin and stablecoins that are the next assets with the most volume. Across Solana, Ethereum, etc. But they are essentially expressing the same thing, which is the dollar value or Bitcoin, the Bitcoin value. The only difference with them is that you have different security assumption. They trade across different chains, but they are essentially doing the same thing. And because they are fragmented across chains, we saw an opportunity to unify that and make it more efficient. Users that are coming to Bitcoin and using stablecoin today are more sophisticated. They are not necessarily users that are from crypto all the time. So there's much more demand for this, and this is kind of like what we want to build for lending for these users.
Okay,
Okay,
so put
okay.
put put very simply for the folks that like low level DeFi users, right? Like
Yeah.
they show up to your platform, they show up to Venice. What can they do on your platform?
Yep. So users that come to our platform today, if you have Bitcoin that you want to lend and borrow stables against it, you can get the best rate that you can at a you can get the best fixed rate that you want. You determine the rate that you're looking for, and you get to earn it. In the background, what we're doing, we are basically connecting different lending platforms and making you earn yield while you're waiting to get matched on your loan.
Okay, nice. So how is that different than the? I mean, I understand how that's different than the traditional way. Like usually, pre-order being filled, you're not going to get yield on it. So can you explain to us like how you're able to offer that when nobody else could offer that as a product?
Yep. So what happens is that we are routing idle liquidity to lending pools and users. So whether you're a borrower or lender, you get to get repaid fast. You get to repay your loan faster, or you get to earn yield instead of having you as a lender waiting to get matched on the loan, you get the best offer that you would be getting anyways, even if you were not using our platform. So it's a win-win. You determine the threshold of the rate you're looking for, and while you're waiting to get matched, we're offering you the yield already generated in the backend.
And are you utilizing the liquidity that's being put up in that order, and that's how you're able to offer the yield on it?
Yeah, so the way we are offering yield is yeah, so we are tapping into these lending pools. Kind of like what is unique about us is how the yield is gets redistributed to our users. We want to be aligned for long-term value for the protocols. So very similar to Uniswap V3 with concentrated liquidity, we are trying to emulate that for our order book and the market rates. So the proximity to the market rate across pairs determines the yield that you're getting back, as well as other factors like principal and asset pair. Yeah.
Awesome. Yeah. So essentially you're maximizing somebody's ability to earn, right? If they're coming to
Exactly.
you, they have a competitive advantage over somebody going to a separate platform because they have the ability to earn on top of them.
That's exactly true. Yeah. And one of we are building right now on Bitcoin, and one of the really exciting things about um, working with you at Spicenet is we want to be able to tap into as many assets as possible across different chains, because as I mentioned at the start, right, Bitcoin and wrap Bitcoin derivatives and stablecoins are not only on the chains we are building on right now, but they are really big on every single ecosystem.
Yeah. So, I mean, I love obviously where this is going. I'm going to let you keep going there. What do you see it like? What are some of the things you're most excited about as an example to be able to serve new clientele through SpiceFlow as a product?
Yeah, so um, we often give that example, which is when opportunities are being compared today in crypto, they are being compared on an ecosystem level. Very little comparison is being made in terms of in terms of the strategy or the actual intent of the borrower. So what that means is that if you have an opportunity to earn stablecoin yield in a specific ecosystem, you don't necessarily compare to that exact same type of strategy across, let's say, Ethereum, Solana, Sui. What we want to, be able to allow users to do is that different strategies have different risk profile, um, and you should be able to compare and deploy where you are getting the best yield for the strategy you're looking to deploy. With Spicenet, um, as we get to tap into more ecosystem and more chains, what that allows us to do is like unlock, you know, let's say you were earning stablecoin yield on lending pools. Most simple example, you could be comparing the yield you're getting on Camino, on Solana, on Morpho, on Coland, on Liquidium, and that would be amazing because now you don't have to think about how do what is the different opportunities, open 20 tabs. You just have one single platform where you get the best rates. You get to just compare it on a single page.
Right. So that's for your kind of like your outbound flow, right? Like once the users get to you, you're able to direct them to more and more venues in the
Yep.
space and kind of aggregate more venues in the space. And that's that's like an advantage of our Spice Edge product, right? So that's us giving the edge to you guys by allowing you guys to incorporate more venues, and at the end of the day, giving an edge to your users. And that's, I mean, I think the problem, the product that we've touched less on, and is not the focus for today, but it's definitely like the thing I'm most excited about. I think this is like, we'll see a lot of game changing products be created through this. Um, But for today, like we're focusing on the distribution front, like so purely like inviting more users to actually get to your application in the first place. Um, for for somebody that wouldn't know at all, how would somebody use your platform pre Spicenet?
Yeah, so you simply follow us on X, and then you sign up to our platform. If right now we haven't released it, we still have our it's only available to a few users, but we are looking to open it for any testnet users to use it soon.
Mm. Right, and then I mean for the actual user flow, like you know, say I'm a user, I have my money on Ethereum right now in a MetaMask. Like,
Yep,
how do I use your platform if that's where I am right now? Assuming that you're public testnet, right, or your
right.
public mainnet, how would I
Yeah,
use your platform?
yeah. To start, if you have let's say a MetaMask, you deposit your assets, so WBTC, onto our platform. If you're looking to lend or borrow, uh, slightly different flows, but if you're looking to borrow, uh, into uh, you deposit into the contract that you're looking to interact with, and you determine the LTV, the maturity of the loan, and you if you're looking to put a limit order and wait to get matched, that's great. Or if you want to simply lift an order, a market order, you can do that too.
Okay, nice. And like what chain is this available to at launch?
Yeah, so we are going to be launching first on Core. So Core DAO, they have about 200 million in TVL from Solve BTC, and they have Colend. So we're looking to support Core DAO first, and the assets there.
Nice. And what made you choose CoreDAO as opposed to a different blockchain and any of the other like Bitcoin oriented? Because Bitcoin's your real focus here out of the gate.
Yeah,
Why Core versus something else?
yeah. So when we look at the Bitcoin ecosystem today, right, you have about $450 billion of Bitcoin being used in to earn some form of yield within DeFi or some other forms of activity. So basically, it's not sitting idle and not doing anything. And for Core, what is really exciting is some of the development they're doing. First, they already have a pretty strong partnership with Maple. They are coming up with a new chain, like a new LST product between Maple and Core, and they're getting a lot of institutions getting excited to use this. And yeah, so we as I mentioned, we are looking to leverage existing idle pools, so we can tap into ideal liquidity on Colan to leverage that. Yeah.
Yeah, I mean, we're actually quite familiar with the Maple team. I was talking to one of their guys yesterday.
Yep.
Shout out to Maple. They launched a new product yesterday with their M Syrup USD
Yep.
vault through Midas, the app. I still have to go check it out. I think unless it's full already, there was like limited to 10 million in deposits that they were offering, but I was hoping to get in there. Hopefully, not too late. But yeah, love what the Maple team's doing, and that's cool. I actually wasn't aware of that partnership between them and Core, and so you're basically parked there. Like, to sum it up, because that's where you see the highest yields being available to your users, right? So that's where you're wanting to start off.
Yeah, that's exactly it. And some of the other L2s are still unproven, right? Like obviously Bob is a levered play here. You
Mhm.
have other platforms like Plasma, obviously, because we are stablecoin focused. Plasma is a chain on Bitcoin. It makes a lot of sense for us to be building there. But they're still building their Bitcoin support right now, and they don't have that available yet. So we literally cannot build our lending platform without a Bitcoin
Yeah.
element. Alpen, they are going to be going live in Q1 26. But yeah, there's just so many things going on in Bitcoin. It's hard to keep track sometimes.
Absolutely, dude. I mean, it's exciting that you're building, you're carving out this niche, you're allowing people to earn on their Bitcoin. I think it's such an inevitable thing. I've been saying this for such a long time. Like, you have your Bitcoin purists that are going to tell you that people aren't going to earn yield on their Bitcoin. They're not interested in taking on that added risk. I completely disagree. I think you're going to get financial institutions that base their business on Bitcoin instead of US dollars, as you see nowadays, and they're going to do the same thing that these institutions are doing right now, which is fighting over who can offer better interest rates, better yield for the people that are depositing into their fund or whatever their strategy is, right? Like,
Yep.
it's a no-brainer in my mind that that is eventually where we end up once the security is proven. And I think, like, it doesn't actually take that long for people to trust this. Like, could be a handful of, like, couple of years before it's like, okay, really taking off, because
Mhm.
okay, people have started to do this. Somebody in traditional finance with a shitload of Bitcoin, a shitload of money, has started to deploy into this, and all of a sudden they're outperforming every single other person in the sector that hasn't done that yet. Like, that's all it takes to push the needle over, and now
Yep.
all of a sudden everyone's doing it. That's super cool, and I like that your answer for why you would want to be building to a blockchain isn't simply because, oh, like, this is where I'm going to get the most users, because this is like the whole thesis behind Spice Flow, and like why that product excites me is you have people building on all these different blockchains. And I mean, more specifically, you have all these different blockchains building very unique use cases, very unique partnerships. Like, CoreDAO's partnership with Maple is a very unique one that's going to enable, in your eyes, the highest yield available for Bitcoin in the space, right? And you're absolutely right to say, like, if I'm searching for yield on my Bitcoin, I shouldn't be asking myself, like, what's the highest yield I can get on this blockchain? I should be asking myself, I have Bitcoin, what's the way I can earn the most Bitcoin? Because at the end of the day, that's all that matters. Um, so to tie that all together, this is why I'm excited about Spice Flow, because somebody like you guys is able to ask yourself the question, where can I find the highest yield for my users, for them to have the largest competitive advantage, to earn the most with their Bitcoin? I'm going to go there and build it. And I'm not going to worry about which users are going to find me. I'm going to use SpiceFlow to go to the users after I've already built in the right place. And that's, I think, the whole idea. And like, what I am most excited about for this is, like, to be able to offer people the opportunity to do that, to stop building on Ethereum layer one with your wrapped Bitcoin over there, trying to create yield sources for it over there. No, like, there's partnerships and architecture being built specifically for this. Let's leverage that. Let's build a product like Venice that is going to take advantage of that. And no doubt being able to offer a competitive advantage over somebody else trying to do the same thing on, like, your typical general purpose chain like Ethereum. And then let's offer that accessibility to that product to the most users as possible. I think when those two things meet each other, like the traditional applications that everyone's using nowadays, like, Aave, for the lending borrowing game, they start to own a little bit less market share year after year, because it's just as easy to access Venice as it is to access Aave. And on Venice, I can get better yields.
Yep. And I think to your point, like the question around comfort in using a product like this, I think a lot of people, especially in DeFi, they got burnt really early with bridges and products that were cross chain. So um, there is some like concerns there, but with a lot of, as you said, the infra is getting built to make this possible today and much safer. So we are seeing like that being like the next unlock. Yeah.
Yeah, absolutely. And I mean, cross-chain actions are the most risky ones in crypto.
Yep.
Like, bar none, they are. bridging is like the way that most people have lost money in hacks in all of crypto. And we removed the need to have to do that.
Yep.
So I went on and on about this on the AMA yesterday. I'll try not to rant so hard as I did yesterday, but like, just to explain the system that we're providing here, it's one where your funds don't leave the chain that you're on, don't go to another chain until the assets that you're wanting to receive on that other chain are already provided for you. So the outcomes are already provided for you, which is the opposite of what you see with traditional bridging, where, like, if I go through Wormhole, I am basically burning my tokens here and then hoping that they're going to mint the tokens on the other end and give those tokens to me. That's kind of the wrong order of operations, because if my tokens get burnt here and then not minted over there, oh shit, right? So what we do differently is you escrow your tokens over here, and only once Spicenet as a network is able to provide the result that you want on the other end. So in this case, like, you're wanting to deposit your assets on Venice and then you're wanting to borrow against them. Only once you have you'll use your capital over here on Ethereum to sponsor that transaction, but only once that transaction goes through are you actually going to not have access to your Ethereum anymore. So in doing that, like, I think we mitigate a lot of the cross-chain risks. It becomes, just as safe as like a native transaction.
Yep.
And I mean, that's obviously the hope, right? And if we're able to do that, then, like, all of a sudden you're not going to have people asking what's the best yield I can get for this asset on this blockchain. It's going to stop after the first half of the question. What's the best yield I can get for this asset? Right?
Exactly.
Yeah.
And I think like simplifying that aspect of crypto is going to make even more users comfortable with it, because that just makes it like way easier to understand, because it becomes suddenly comparable to TradFi opportunities you're thinking about here.
Yeah. Are you thinking about that as well? Like, I mean, no doubt you're thinking about it, but in your mind, like, what's your route to being able to offer services to, like, the TradFi investor that's wanting to A, get their exposure to Bitcoin, and then B, be able to maximize the effectiveness of that exposure?
Yeah, so I think that's one of the really attractive things about Core, is that the Maple Core product has the roadshow and like the marketing has been mainly institutional focused. So
Mhm.
we're quite excited, to be working there and tapping into that ecosystem. So yeah, just to go back, with you were mentioning how you have today like a lot of institutions, but also treasuries looking to hold Bitcoin or other assets and building, but you don't necessarily see them interacting with DeFi. Just like Michael Saylor started like Bitcoin strategy, and kind of he was the only one doing it for a long time, right?
Yep.
And everyone thought he was like an idiot or like a crazy guy, until like now everyone's copying him and doing the exact same thing, right? It
on,
only takes
on
one.
every crypto asset, like,
Yeah,
yeah, not just Bitcoin, all of them. Yeah.
and and I think like these new model, like, so right now you have everyone copying strategy and doing the same thing. Okay, I'm going to do strategy for Solana, do strategy for Ethereum, do strategy for XYZ, and there's no differentiation across them. Like, it doesn't take a genius to buy crypto. Like, you're not like that smart for doing it. um, but what is more interesting is like, what can you do differently, or like what can you maybe do to earn your like your shareholders more, like, or accrue more value. So I think what's interesting is you're seeing some companies coming up now where they are either trying to do something around RWA, where maybe they buy or do something real with real businesses to earn yield, and maybe use Bitcoin as like a way around lending, or around like using this as a form of collateral. But like last week we saw Forward Industries kind of getting launched, right? So Forward Industries is like Spice. It's like a Solana product launched by the team at Multicoin. And it was quite interesting because like they already are tapping into DeFi. So if you saw on Solana, like some of the DeFi products on Solana just jumped 50% just because there's so much flows into some of these DeFi products. So it just takes one person to start this movement where like you see a treasury tapping into DeFi. And if this works, in 1 month, I'm sure like there's going to be a bunch of treasuries just doing the same thing. And that's just going to basically kind of like start a new trend around like how do I use DeFi to earn yield on for a treasury company. But yeah, that's kind of like what I'm kind of like my thoughts on DeFi and the institutions is that they are not doing it yet, but that's just because like there's not many people that want to take the risk of trying something for the first time. It takes like a couple of people to try it and do it successful, and everyone copies it.
Yeah. So you think that's kind of like the route to TradFi users is like through the treasury companies?
Yeah, I mean these treasury companies, I don't see any value that they're providing right now. So they are creating a like a shell and are acquiring Bitcoin. It's makes it very easy for anyone to get exposure to a crypto asset, but um, it the underlying uh, is just a wrapper, right? There's nothing else to it. Um, I see the goal of like a management company taking a fee on holding crypto. They have to do a little bit more than just holding the crypto.
Yeah.
Um, yeah,
Yeah. Definitely. And then that's where you guys come in, right? Like you're one of the ways that they can present a competitive advantage.
exactly. Like, solutions like us, solutions within DeFi, you as a manager or as a, uh, like as the one curating like a public vehicle and holding a certain amount of Bitcoin or other crypto, if you're able to successfully allocate to DeFi or some form of a yield bearing strategy and do it successfully to earn yield for your shareholder, your stock price should appreciate based on that.
Yeah. And I mean, I had an interesting conversation the other day with a friend of mine that's in investment banking, and he's super focused on like TradFi companies that are offering some sort of crypto exposure, whether it's like a treasury company or some other strategy. Um, and his take is actually that like companies like MicroStrategy, other treasury companies are going to start trading at a discount to their NAV. When currently like they trade at a premium, which means that the overall market cap of their shares is worth more than the amount of like let's say it's Bitcoin, worth more than the amount of Bitcoin they're holding, and they're only actually holding Bitcoin, right? Like you said, they're not doing anything with it, which is obviously problematic, right? Like, or not necessarily problematic. What's actually more problematic is if it does trade at a discount, because all of a sudden, if that becomes too much of a discount, then they have to start liquidating some of the asset and doing buybacks of their shares.
Right.
And then if we see this happen across the board with these treasury companies, like in my mind, that's like the most likely way that we see a really deadly bull market or bear market in crypto now is we see like a bunch of these treasury companies unwinding all of this Bitcoin and other assets that they've built up. Um, so, I mean, what I'm getting at there is any way that these treasury companies can avoid trading at a discount to their NAV is actually really good for the industry on the whole. It basically suggests that there's more appetite in traditional finance that doesn't have the ability or the know to be able to get access to these assets, but they want the exposure. In my mind, that's a bullish thing for crypto. If that flips around and like eventually it will if nothing changes and if they're not doing anything to produce more results than just holding Bitcoin, that'll flip around because it'll be way more accessible to buy Bitcoin. The younger generation are the generation that understands how to do it, so they can do it themselves. And then why would I want to buy a treasury company that is going to hold my Bitcoin when I can hold my own Bitcoin, right?
Right.
So it would add risk without adding extra reward, and then you might see a cascade of a lot of these companies dying and a lot of Bitcoin being liquidated. Not really good news for all of us. But if these companies have an edge of being able to offer better returns on top of holding that asset, then there's a reason for them to trade at this premium. You don't have to see them sell these assets back to do their buybacks of shares. We don't have to have that deadly bear market.
Hmm.
So that I hope you guys can save us.
Yeah.
save
No,
save us
that
save us from the bear market.
yeah,
Yeah.
I think I agree with you that, in the next 6 to 9 months, if we continue seeing as many of these treasuries popping up, it might lead to something like that. Like I also see, like consolidation makes sense, right? A lot of these companies are doing the same thing. Just one company acquiring them and doing it better could could be the solution. Yeah.
Yeah, I mean, even then, I'm not sure it fully solves the problem, but probably reduces the risk. Yeah.
Yeah.
But yeah, I mean, I don't know. It's sort of a scary outcome that I feel like isn't being talked about, and it's one of those ones that I feel like, okay, at least I'm aware of this, and I can look at the nav, and if I see that flip, like that's probably my top signal, at least for the short term or the medium term, and I don't. I mean, I think that'll catch a lot of people off guard if it happens.
Yeah. Especially a lot of them don't, because they are not generating any yield or participating in anything to earn some yield, and are not doing anything with those assets. There is very little that they they are completely exposed to any form of, like, downturn to in crypto. Yeah. Um, yeah, I think, that it doesn't have, obviously I would love to mainly see DeFi being the use case, and how these treasury companies are doing and growing. But there could also be like other ways to generate yield, right? Like you could be using cryptos or Bitcoin as like a way to finance real world application. I mean, that's also something that would be super interesting.
Do you think that happens over the blockchain, or do you think that happens
I think
outside
it's a
of
mix. It doesn't have to be completely like on chain.
it?
Like a really good example, actually, a friend of mine is working on this. Is they all come from like special sits, and are, all come from credit investing, where they were working on, bankruptcies and things like that. So whenever you have situation like this, you have a lot of trapped capital that is very inefficient. What do you do with like trapped capital? You liquidate it, and then why don't you buy like the best performing asset in the last 10 years? Like you buy Bitcoin. So I mean, that's kind of like an easy way for you to, like, do something that very little people know how to do. So obviously the team building this is expert at doing this. And instead of just like, holding cash and continue doing that business, they're just um, buying into Bitcoin and growing. Yeah.
Yeah, no, I agree. I think it'll end up being kind of a bailout, or just like a bailout in some cases, but also just like a competitive asset to be bailing into from all of your shitty assets.
Yeah.
Yeah.
Okay, thank you very much for those insight. Mr. Matt really kicked it off. Thank you for holding the ground. And of course, Etty, for joining in, and to our community. For those that joined in late or are a bit confused of what we are talking about, this is Spicy Takes episode 20, and we're talking about from flow to fragmentation. Can lending really feel native across chain? Now, for the benefit of those that joined in late, let's go back to the topic itself, and I would love for Matt to really answer this. Just the question, we're already rounding up here. Can lending feel native across chain? And if yes, How is that possible? Just to jog our memory, a one liner, very explanatory for the users.
Yeah, I mean, yeah, I'll be brief about it, and then I'd love to kind of let you take it away at the end there, Ethi. But um, there's no reason why being on one chain with your money on one chain has to limit you to only having the opportunities on that chain. And SpiceFlow proves that. You can use your collateral on one chain to fund operations on another chain. And yeah, I mean, if you bake that directly into the front end of an application, absolutely, it can feel native across chains. And that's our whole kind of goal with it, to be honest. So yeah, I mean, uh, yeah, it can, it can, and it has with what we've built. And yeah, before we head off, Ethy, just remind the folks, why it is they should care about Venice, what they can do to support you guys, and then if there's anything you guys have coming up that you want them to kind of tune into, yeah, let the people know.
Yeah, definitely. So yeah, we are building a platform that allows lenders and borrowers to have more control over the interest rates and the terms that they want to get as a lender or borrower. So we are a fixed rate lending platform focused on Bitcoin and stablecoin derivatives. Yes, follow us on Twitter. You can check out our landing page. We are going to be launching and releasing our testnet for anyone to access pretty soon. Yeah, it's been a great space. Thank you so much for having me.
Yeah,
Thank
absolutely.
joining. Their link, their artist tagged on the screen, so you can see them there to follow through. Thank you once more for joining in, and of course, Mr. Pepper, I didn't say thank you at the beginning, so thank you for joining in as always. And to our community, thank you so much. And of course, if you know you enjoyed today's space, make sure to follow Spicenet, make sure to follow Venus. The handle is right on your screen. So make sure to give them a follow and stay tuned for what they are building. And of course, keep the conversation going. We want to see your takes in the comment. Know that this is Spicy Takes, and we always want to see your takes. Quote this space. Let us know one or two things you picked up from here. Drop comments. Just keep the conversation going. Thank you once more. Till next time, stay spicy. See you in the next episode. Bye, guys.
Yeah, stay spicy,
See you.
guys.